And we are live. Welcome to this edition of Wealthy Wednesday. And I am so fired up for today's event. It is going to be amazing. Going to learn so much incredible information. My name is Leah Garcia, financial specialist, strategist, and insurance specialist. And I'm here to help you properly protect, distribute, and transfer your wealth. And what I mean by that, if you have assets such as 401ks, IRAs, that are still in the market and you're concerned about the up and down, maybe it's time to start protecting those assets and securing those assets. Also, distribution. We accumulate this wealth. How do we spend it? I call it a spending plan. And then the transfer of wealth, which is not just accumulating these assets, but transferring them and creating generational and multi-generational wealth. That is true estate planning, that you have these assets to pass down and have people who are going to leave your legacy for you. So absolutely. And we have Mr. David Jones, CEO. Mr. Jones, I can't even call you by your first name. He's Mr. Jones to me, the one of the founders of Hello LLC, and also his amazing partner, Miss Tara. They are in partnership building that. If you want to know anything about the metaverse, if you want to know anything about taking your business to the next level, you absolutely need to connect with them. So with that being said, today we're going to talk about how to get loans. Okay, mortgages. There's a certain way. And if you are a physician or you're in the medical profession, you absolutely want to tune in today. So today we have, somebody that is near and dear to my heart. I don't even know how else to say this. We do these money minutes. I'm sure you've seen them. Hopefully, if you're tuning into this, you've seen our money minutes. And Patrick and I were posting our money minutes, and we're feeling like it's going into a dark hole, not getting any feedback. And then we had this amazing man give us this great recognition, give us some great feedback. So for me, I just have a special place in my heart because that was the first time that we saw, okay, somebody's listening to us. Okay. But he is a mortgage professional. And I say professional because in my mind, there is a difference between somebody who does loans. Maybe they have a license and they can help you, maybe do some of that. And somebody else who's a true professional, who looks holistically, proactively on not just helping you secure that asset, but for today, but to secure it going forward so that it's a true asset and it's a true legacy for you. So without further ado, give it up for Mr. Alan Russell. Alan, take it away.
Thank you, Leah. I appreciate your introduction, and I really like the Money Minutes. I recommend people watch some of the past Money Minutes because they're useful. Not just protecting your asset, but enjoying being a homeowner and understanding where your assets are and how they're growing. So, Leah, thank you very much. I work for Wintrust Mortgage. They're a bank and mortgage company out of the Midwest. We own 15 banks, and together we work under the umbrella of Wintrust. And we're going to talk initially about the medical professional, we call it the doctor loan. And first, who can get it? So it could be physicians, dentists, oral surgeons, pharmacists, chiropractors, veterinarians, doctors who are completing a fellowship, and residency with residents with less than 6 months remaining. Those people qualify for this program.
Yeah, let's kind of back up just a little bit, Alan.
Sure.
And so when I saw this program, I actually reached out to you as soon as I saw you post this. I thought this was incredible. So if somebody is looking to get a mortgage and they are in the medical profession, there's a very, very huge difference between somebody who is just a mere mortal like myself. I'm not a doctor. I want my money doctor, but somebody like me, and then somebody else who is in the medical profession. So we're really focusing on today, although Alan can help anyone. This is a real special program that I really want to highlight. How did you come about this program initially?
Sure. Wintrust wanted to create a product that would be helpful for more than MDs. It includes doctors, but it also includes, as I mentioned, chiropractors, oral surgeons, veterinarians. And it was a tool to really help doctors get into a home sooner. these people getting into a home sooner. So, for example, we do 0% down up to an $850,000 mortgage, 3% to 1.25 million mortgage, 5% to 1.5 million, 10% to 2 million, 20% to 3 million. So what that can allow these professionals to do is buy earlier, and because they already are going to have some student loan debt, and they also want to be in a position where they can get the home and start having home ownership, building wealth, making memories, having some tax write-offs also to help. This allows a easier point of entry, an ability to buy sooner instead of later.
So unpack those numbers for us. I know you can rattle them off and you can calculate them rather quickly, but what does that look like? Let's pretend for a moment that I am a medical doctor and I come to you and I'm just fresh out of grad school and I've got a young family and now I'm looking to secure that home here in California. I don't know what rates are or what homes are outside of California. I know a starter home here where I live in Monterey is about $1 million. Okay, we're talking about a 3-bedroom, 2-bath, maybe even a 1-bath, nothing crazy, just a regular starter home. And now it's $1 million, $1.5 million. What does that look like? How does those numbers translate for me coming in? I've got student debt. A lot of medical professionals I meet, they've got $300,000 to $500,000. Let me say that again.
Yeah.
$300,000 to $500,000 in medical debt. And I'm talking about they went to medical school 10, 20, 30 years ago. So I may be fresh out of medical school and I've got $500,000 or more in medical debt. So how do those numbers benefit somebody in that situation?
Great question. So using your example of Monterey, where you are, if you had a home that was at $1 million, you could do as little as 3% down, right? So now instead of having to do 10 or 20% down, you could do 3% down. So less down payment. That means 30,000 versus, say, the typical 20% down of 200,000. So that's what I mean by the barrier of entry is
wow,
sooner.
Just $30,000 down if the house was about $1 million.
$1.5 million, it would be 5% down. So you could pay 75,000 down plus closing costs on $1.5 million.
75. So 1.5 million, because that's probably more. $1 million, you're probably going to have to put money into it. It's probably going to need some, roof and different things like that. So really, you're probably talking about $1.5 million. So $75,000 down, as opposed to what? If I was in a traditional market, what would that number look like?
150 to 300,000 down.
Wow. You guys got to say, wow, that's huge.
Okay, I'll say wow.
Yeah, that's huge. So unpack again, who could qualify for this a little more? I know you covered it, but I think it's important.
Okay. Let's go through it again. So physicians, dentists, oral surgeons, pharmacists, chiropractors, veterinarians, doctors who are completing a fellowship, and doctors that are residents now that have less than 6 months remaining.
So even if there are currently going through, they haven't yet graduated, they're still doing their training. Is that what residence is?
Yeah. It's the end of the doctor's training before they become their own MDs and get a job at a hospital or a practice.
Wow, that's incredible. So what do the qualifications look like? I mean, sometimes we hear of these great programs, but when you dive into the weeds, all the disclaimers, only if you were born on Sunday and a full moon, like what does this qualifications look like?
Yeah. So one is it's going to require the ability to repay. So meaning that we have to be able to show that the income you are going to have is enough to qualify. Might not just be the doctor if they're married, could be, or, a co-borrower, somebody else borrowing with them. They can use their assets, and they're also allowed to get gift or help from family for down payment.
Okay.
And then it's good for U.S. citizens, green card holders, and non-permanent resident aliens. So it is available for all three, citizen and visa types.
Okay, let's unpack those. So co-borrower, what does that mean? What does that mean? Does that mean that they are like It could be a
Yeah,
parent.
great. Thanks for bringing that up. Co-borrower means someone else is borrowing with you. The idea of this program is that we're doing mortgages for people that are going to live in the home. So co-borrower could be, I'm engaged, I have a spouse or a life partner that is part of my life, and they're going to buy with me.
Okay. Could it be a parent or a sibling, something like that?
It comes down to who's going to be living in the home.
Okay.
Right.
So it has to be whoever is going to be living in the home. But if the parent, a lot of parents are finding they're going to live with their children. I have 2 clients that just did reverse mortgages, and now they're going to be having their kids come and live with them.
Yeah.
Right. So you never know. It might be family members kind of coming back together kind of thing. So that could happen. And would that mean that those people are on the mortgage and on the deed, correct?
Yeah. I wanted to make one point is people say co-signer, co-mortgager as if that person is not responsible. If you are part of the mortgage, you are agreeing to repay the mortgage and you're on the deed of trust. You're an owner of the property.
Okay. So important. That's a good point, meaning that if the primary borrower should default in some way, then that onus is that loan comes on your responsibility.
When you're co-mortgaging, you're equally responsible.
Okay, great. And then now talk about, it could be a gift. What does that look like?
In other words, you could have your down payment come from gifted funds from a family member. You do have to have reserves for this program, but sometimes reserves can be, while I was in school, I worked, I have 401k, I have other assets in my name. Maybe I don't want to use those assets for the down payment.
Okay. I remember when me and my ex-husband, we bought our first house, our in-laws did give us a gift.
Yeah.
And there was a lot that had to go into that. I mean, they had to sign all kinds of stuff. So if somebody is going to be given a gift, are there parameters? In other words, they can only gift you a certain amount, or yeah, how does that work?
Yeah. So first, consult your tax person or your trusted financial advisor and tax person, right? You want to make sure you investigate what the gift requirements are. It's a self-reporting tax event, meaning that parents giving children, for example, gifts, but also there are 2 pieces. One is how much you can give per year, and you can go to irs.gov and look that up on the IRS website. And then there's also a lifetime exclusion. So when I speak to clients and their tax professionals, often that tax professional will say, because the lifetime exclusion is over $10 million, we're in a position where they could give a gift and not create a taxable event or an impact. So, but again, I tell people, you look on the IRS website, talk to your tax person, make sure you're solid with all the steps you're taking. But you mentioned a lot of things involved. It's more signing a letter saying I'm giving a gift with no repayment, and then showing the transfer of the funds. That's what's required for a gift.
Okay. Yeah, when we did it, this was, years ago, 30 years ago. Oh gosh, no, it was more than that. Anyway, we won't talk about how long ago it was, but it was a few days ago, right?
Yeah.
It was a little bit well, I don't know, at that time it seemed like there were a lot. They had to prove that funds had been in their account for X amount of time and all these kind of rigmarole. So, you know what I love what you said, what you just touched on, which is why we connected in the first place, is you take the extra step to recommend, refer them to, have a consultation, even get involved with having that conversation with their tax professional. And that is very unique. I have been in this industry now 18 years, and I talk to many people who are in your same sector, Alan. And oftentimes when I bring up that conversation, well, do you ever refer your clients over to talk to a tax professional? Or have they consulted that? They tell me, you know what, Leah, I stay in my lane. I don't get out into that. That's not my role. And I respectfully disagree. I just truly believe that it is if we're really operating in an integrity, it's really our job to help the clients to understand that there are many elements and specialists that you should bring into the conversation. So I love that you shared that because it's critical. Listen, if you just want to get somebody who's going to give you a mortgage, you go to your buddy down the street or your cousin Larry living on your sofa. Right. But if you really want some, and by the way, for cousin Larry, I don't mean any disrespect. What I'm saying is truly someone who's here to look at your long term success is going to understand that it takes all those specialists working together. So I love that you shared that, Alan.
Thank
That's
you, Leah. I mean, I just feel like the mistakes I've made financially in my life are when I didn't ask one or two more questions, or I didn't seek advice from the people I already had in my life, right? I went, okay, I think I'll do this, right? So it's better to have all the information. You can make the best decision for your family.
absolutely. That's so good. Yeah, so that's a great program. That I feel like that really can help so many medical professionals who are feeling overwhelmed with that debt. They want to have home ownership and they just feel like that's not attainable for them. So I love that. So this program is new, exclusive to your company. And share with us a success story. Give us an example of somebody that you helped with this program.
I had a doctor that was both a MD at an emergency practice and a concierge doctor, kind of doing his own practice also. And he was able to buy a property and finance $2 million of mortgage with 10% down. So the difference for him was like a 230 purchase price. He was putting I'm 2.23. He's putting $230,000 down versus $400,000 to $600,000. So again, allowed him to do it sooner and better. And it just it to him, he said, I got to do something now that I was going to wait a year to do, and I got to do it now and
Wow.
choose when to buy and what house to buy.
That's a huge difference.
It is.
That's huge. Now, obviously, if it's a $2 million home, you're probably talking about California.
Yes.
Okay.
But we do lend in all 50 states, but this program is available, I believe, in 6 states now.
Okay. What are those states? What are those other states?
Places where we have branches and here. So we have
Okay.
a company called Veterans First in Utah, and then Wintrust Mortgage here, and then in the Midwest in Wisconsin and Illinois and Iowa.
Awesome. That's great. And yeah, share with us. I mean, you've been in the industry a little while,
A
like
couple of
myself.
weeks, like you.
Couple, yeah,
Yes.
a couple weeks, couple days. So, you do, I know that you do talk to your clients about protecting that asset. Homeownership for most families is going to be the biggest purchase that they ever make. It's going to be their biggest investment. I talk to people who are in retirement or near retirement, and a majority of their wealth will end up being in some form or fashion in real estate, whether it is their primary residence. In addition to that, they may have some additional rental properties, but the majority of their wealth oftentimes is in real estate. So knowing that, what are some steps, some extra questions that you ask for your clients when they are making that purchase or they're refinancing or they're considering purchasing a home? What are some things that you ask them to be aware of?
First, life is choices. Where we spend our money are our personal choices. We get to decide if we're going to spend $8 a day on a cup of coffee or not. We get to decide if we go out to dinner, how expensive our vacations are, what we do in our life and where we spend our money. So I just try to bring it to that conversation. Like, okay, you make 200,000 a year. How much do you bring home every 2 weeks? And let's look at your budget. Let's see what you're comfortable with. And especially when the numbers are high here, property is so expensive that you can
Mhm.
end up with a situation where your mortgage payment is higher than you want it to be because of the cost of the real estate. So we have to go back and really look at, is there anything in your budget that we can remove? Is there are enhancements that you can do? I want people to buy and still be able to contribute to 401k, protect the asset they just bought. And that's not just homeowners insurance. That's my income. the protecting the mortgage to make sure if something happened to me, who is the mortgage paid? Is there protection there? I think it's important. We tend to focus transactionally on this moment, getting them into the home, which is important. But I also I ask, what does the home look like today? And now that we're in contract and you're about to close, what is it going to look like? And I'm going to call you in 30 days because it's exciting when you move in. And then when you need to start repaying the money, we want to make sure we've covered all those conversations. So we're in a position where they really understand the responsibility and what the costs are going to be.
Man, that's so huge. I mean, in California, the housing prices here are just, and I think they've gone up in a lot of places, but here to think you're probably going to have a mortgage, a home that's going to be $1 million or more. So you're looking at a mortgage that could be thousands of dollars a month. I mean,
right.
Which to me is kind of incomprehensible, but that's a reality of it. And if that mortgage ends up being more of a burden, let's say, for example, you calculate your mortgage based on overtime or based on a bonus that you received last year or based on, you're working 80 hours a week and that's how you're going to be able to afford this mortgage. That may seem all sexy and wonderful when you're getting excited and you're going to be moving in. But what does that feel like 90 days later, 30 days later, a year later? I know people who are commuting hours, here in California, might be over Pacheco Pass or maybe over the Altamont. They're living in Manteca, living in Los Banos, and the housing prices are more affordable. But that one-way commute is an hour, 2 hours, 3 hours. What does that feel like a year, 2 years, 5 years down the road? So I love that you said that, Alan.
And we try to, your point is really well taken, that if I'm counting on my RSUs, my restricted stock units, my bonus, overtime, whatever it might be, we always have that conversation. Are you comfortable counting that? I would recommend trying to qualify in your base or your base plus, a percentage of it. But it's a monthly debt. It's not quarterly when your RSUs vest. It's not at the end of 6 months when your ESPP, if you have stock plan, where you get your 15% discount, and now you have some income you could touch. You got to live every month. You got to be ready to make that payment. So I feel it's my responsibility to make sure you know what you're getting into. And again, that dream before we buy, that dream when we buy, and that dream after we buy, what's ironically is the reaction by buyers is very similar to the mechanic I just helped who paid $640,000 in Antioch, and the loan I'm closing tomorrow that is a $2.3 million purchase in San Jose. They both had the same fears. Lord, this is a stretch. What are we going to do? So that ability to really just talk through it and say, those are all natural feelings. Let's make sure you're prepared.
Yeah, that's so good, because that dream could quickly become a nightmare. And without somebody,
right?
Absolutely. And without somebody who is here for you long term, this is the difference between somebody who can write a mortgage and a specialist, a professional who is truly going to look at your best interest. And that's how you get that. Somebody who is looking at it that way, like you are, Alan, which I would say is very, very few in your industry, but somebody like yourself who's looking at it long term, you're okay telling the client, no, listen, you may not be eligible. It probably is not in your best interest to buy this home right now. Let's look at it 6 months from now, a year from now, and give them some guidance and coaching. So when you can do that, somebody who can tell you no or really help you to understand the reality and prevent that dream from going awry is truly somebody who does have your best interest at heart, and it is here long term. So I love that. That's so great. How about, I know that you talk about also living trust and you talk about mortgage protection for your clients. That was how we initially got connected. So let's talk about, first of all, mortgage protection.
Sure.
It's something that you talk to people about. I'd like to know why, because it's very unique.
Yeah, well, part of it is you're going to get a lot of mail, a lot of phone calls, I mean, we are spammed from a marketing standpoint in many areas of our life. So I said, one of them that you're going to get is going to be why don't you get mortgage protection and think of it as a protection in case something happens to you or your co-owner. What happens with the mortgage? Is it paid down? Are there other assets that you can count on, and protecting your income? If this whole thing's based on two of us working, well, two of us better keep working because of what the expense is per month. So, really looking at that, saying, if you say, do you want to talk about life insurance? Do you want to talk about disability? Do you want to? No, I'll pass, man. You're so morbid, Ellen. But you need to be real about that. And one of the gifts I got in experience before my father passed, he sat down and told us, here's what I want done with my estate. And here's where I want it to go. Even donations and things like that. He was super clear about, these are my wishes, saying it to us while he's fine and we're fine. That's the way I look at it, like a trust. Do it, protect it, put it in the safety deposit box or your cabinet or, wherever you keep it. Keep your documents, but have that protected. You can relax knowing you have plans for your home and your children and those things.
Yeah. And that's really, where my wellhouse is. So
Yes.
we're gonna break that down a little bit more. So mortgage protection, meaning that if you should pass away unexpectedly, right? Face your demise much sooner than you anticipated. And now you had husband and wife, two co-borrowers, and one of them passes away. How do you protect that dream?
Right. I own it now. How do I protect it? Part of it is homeowners insurance, right? But that protects you and the lender in case there's a fire or damage to the home. But now what about the rest of it? What about my income? What about my life? Those things. You want to consider the overall picture.
Yeah, because the worst thing that can happen is somebody passes away and now they not only have to deal with the grief, but they have to deal with the stress of what do they do? How are they going to make their mortgage payment? Do they have to end up selling? And by the way, it's not just if you pass away, because mortgage protection is essentially a term life insurance, which is, by the way, the most affordable way to get life insurance for most people. Term life insurance can include living benefits, meaning if you should have a chronic illness, like a major accident, and you're incapacitated for at least 90 days, or you should get diagnosed, cancer, heart attack, stroke. Now you can access a portion of that death benefit right now when you're alive and be able to pay for the bills, keep food on the table and all of those things. So term life insurance really is much more than just about if you pass away. And I have a client that share a quick story this actually happened to. Husband, wife, they were my clients, and I did health insurance at the time and was sharing with them about life insurance. And they like everybody, we'll do it when. Well, they finally ended up protecting that. But the coverage they were able to secure when unfortunately the husband got diagnosed just a short time later really saved his family that stress of having to worry about, are we going to be able to keep the home? And do we have to uproot our kids at a time when they're experiencing the loss of their father? And now we have to end up moving in with other people. I mean, that's just something you don't want to do. And she's going to be a guest on my Wealthy Wednesday coming up. I'm really excited about that. So I appreciate so much. I honor you so much, Ellen, that you do have that conversation. And that is where the difference between working with a true professional and somebody who just wants to sell you a loan. Big difference.
I've noticed that too when you talk about trust and you talk about protecting the asset from a standpoint of, it's no longer Alan's home, it's the Russell Family Trust, or whatever your trust name is, and what the benefits are of that. They are extensive, and I think it's very important.
Yeah, it is so important. And that's really a blind spot for a lot of families. Every family I talk to, I always begin with the end in mind. I'm going to ask them about setting up a trust, even if they don't own hard assets, because there's many reasons you will want to own a trust, even if you don't have real estate right now currently. And oftentimes, I would say When I first started in the industry, I would say about 60% of people owned a living trust in some form or fashion. Today, that number is less than 1%. The majority of people do not own a living trust, not a will, by the way. Okay, that's something else. In California, you need a will and a trust. They work together, although they can work independently. But in my opinion, and I'm not an attorney, okay, so this is not legal advice, but what I've seen is I help people to get prepared and organized so that when they meet with the attorney, it saves them money and time. And what I have seen is people just don't have a trust, or they think they can scratch some things up on a piece of paper, a holographic will, and just kind of put it under their sofa cushions and kind of hope that works. Listen, does that make sense when your asset is worth, hundreds of thousands or even millions of dollars? So absolutely, a living trust can save your family, can save your assets, can save you anguish, can save families bickering, and also really preserve that legacy. So I'm curious, Alan, how is it that you have these conversations? Because that's very unique in your industry. What has happened, or was that something you always did?
Yeah. So again, biggest, you mentioned earlier, the biggest thing we do financially, right? The biggest investment of our money and our time and and the benefits are building wealth and building the memories. I mean, a family having that home and all the memories you build. That's what people tell me when they sell. Oh, look at, we marked up the wall where our kids were growing. Hey, remember when we did this remodel? Remember when we redid the backyard? Remember the birthday celebration?
Right.
So, being that important, I think it's critical to have the conversation. I just see that the people that are prepared, they've asked their questions, they understand their cash requirements to buy, they understand what the new payments will be, they see how it fits in their budget. They are, I rarely hear, unless a catastrophic thing happens in their life, which can happen, of course, but I rarely hear complaints about this is really hard. They're prepared. They're like, we're ready. So, I mean, one thing is when you're preparing, if your payment's going to be $7,000 a month, show yourself, not me, that you can save $7,000 a month, because you're going to go from that rent of $2,500 to a $7,000 payment, including taxes and insurance. Practice. Show me that you can do it. Show yourself. Then you have confidence. And when that first payment comes, it's not charming, it's not fun, but you're ready for it and you have the money saved and you're ready to go.
That is so good, because I actually will do that if clients are preparing to buy a home. Listen, that extra $5,000, you start putting in there. So I love the term practice. Make a practice payment, okay?
Yeah.
Start paying it. Show me, prove to me that you're ready, that you
I
can
was
do it.
talking to someone last night and said, you haven't been getting back to me. And she said, you told me to practice for 3 months. I've only done it 2 months. I'm going to call you in June. And I'm like, okay, good. I'm glad you're doing it. It's for her, right? I want her to be successful.
That's great. Share with us a story, because you do talk about living trust, of somebody that has benefited from taking your advice, setting up a trust, and how grateful they were.
I don't, as you said, you and I are not attorneys, so I don't know. I know some general knowledge, but I don't know the legal difference between the two when it comes to the impact on finances. But I had someone who had a will and kept putting off a trust. Got it. This is about 10 years ago. Got a trust, created a trust. And then within 3 or 4 months, the spouse passed away. Her spouse passed away. And her attorney said the difference was $30,000 or $40,000 from her, just by that, a modest amount of wealth. And she was able to save that much on taxes and loss of control, in the respect that when you have a trust, you're executing the plans you made in advance, right? And those things are happening instead of the state of California deciding what to do with your assets through probate.
Yeah, that's so good. That's so great. So you've been talking to your clients about trust for quite some time then.
Yeah, I'm convinced once you have accumulated some asset base, especially buying a home, that it's a necessary part of your financial plan.
That's so great. I love that. Well, we're getting to know you professionally. What do you do for fun? Like, share with us a little bit about yourself. I live here in Monterey, and I love to just go for beach walks, and I search for heart rocks. What do you do for fun, Alan? What do you and your wife do for fun?
You search for heart rocks?
I do.
Do you find some? Show me one.
I find many. Look at this is one of my favorite heart rocks.
That is a
I,
heart rock.
oh, it's beautiful. It feels so good. This one's my favorite, but I have many of them.
Where'd you find it?
I find them. I find them all over.
Yeah.
I usually go to Del Monte Beach, or I will go to Carmel State
Sure.
Beach, which is really, really pretty there. But I
Beautiful.
usually have the most success on the Del Monte one. I think because I'm there more often. It's literally a 5-minute walk from my office. I mean, I have to pinch myself every single day. The beach is right here. The wharf is right there. My gym is right here. I get up in the morning, come to the office, get some coffee or tea, and then I'll walk over to the gym, come back here. I just got to pinch myself. It's so beautiful being able to live here. But yes, I do love collecting heart rocks.
That's great. So you ask about me. So live in Cupertino. So live in the South Bay. Grew up in Portola Valley, Palo Alto area. Have 2 grown children. One of them is in New York and is a chef, has 3 restaurants. So we go back and forth. We actually have an apartment in Brooklyn also. So we can go visit more often. We have 2 grandchildren, like to read, travel, drink wine, eat food. And actually, I just like later today, I'm meeting with a group of people that I've never met before. I'm curious about other people's stories too. And just that interest of through what I do for work, I feel blessed that I get a chance to hear, many different versions. Each of us is individual, and getting to know other people is a blast.
I totally agree with you.
Yeah.
I think it becomes really an addiction.
Yeah.
And I learned so much from other people's stories, just, what the legacy they're trying to build, that they're planning to build, and their why. Like, how is that
That's the
important
why,
to
yeah.
you? And, I just met a client that, father probably has an asset of, I don't know, $5-7 million. So I'm always curious, how do they create that wealth? What do they do? Because it's living trusts for me are not just about transferring their wealth and avoiding probate, although they do that wonderfully. It's also about the stories, right? Handing down those stories, your wisdom, your knowledge, your intellectual property. So I love learning the stories of, maybe they bought one property, or they, had to save up and they bought a property for, $10,000, $20,000 back in 1942.
Yes.
I love to hear those stories.
Me too. And
Yeah.
you find I love to hear people's stories because they just light up, right?
They do.
Their whys become vivid and in color.
They
Definitely.
relive them right there with you.
Us. Yeah.
Absolutely. Oh my gosh, I'm so on page with you. I love that, just watching, and they might feel a little feeble, but as soon as they start reliving that story, they just blossom, and they're right there in that moment. I love that. So let's take a moment. I have one precious grandchild, only 5-year-old, my grandson. I call him High Five because he's 5, so we do a high five. Tell us a little bit. Go ahead and brag about your grandchildren for a moment.
Oh, everyone loves it when we brag, but here we go. I have Wesley, who's just turned 6, and Milo, who's a year and a half old, and they're both incredible. One lives in Connecticut, and the other one lives in Brooklyn, and just to see things through a child's eyes again. I've done it as myself, as a young adult, as a parent, and now as a grandparent, to do things like going to the Monterey Bay Aquarium with someone who is just completely, their eyes light up and they're so excited to be part of that and go through that with them, to go through how they handle a challenge or a problem, and just trying to help them with our experience a little bit, to help them through that. It's a gift. It's wonderful.
Yeah. My grandson recently has been struggling with getting frustrated and having his little meltdowns. I've been talking with Shanae here on LinkedIn, but So he was, having these meltdowns. If he got frustrated, his toy broke apart or something he built, suddenly he knocks it over and he would just cry and he's just, struggling. And so I'm helping him work through that, just trying to be calm and reflective. And so he worked through it. And then afterwards, after when he had calmed himself down, I asked him, Mijo, what do you do when you get frustrated at school? And do you know what he said to me, Alan?
No, what did he say?
He said, I don't get frustrated at school.
Oh,
So what I realized is this show was for me. Okay,
yeah.
this was all about me.
Direct
I
messaging
get
to
it.
you.
He's playing the game. All right. And so I learned a huge lesson from that. So the next time he did it, you know what? I just let him go through it and I
Yeah.
just went on my zippity doo dah way. And I think he's kind of cured himself of that. But, kids teach us so much. You're
They
so right. Being able to relive it again and watching the little idiosyncrasies or how they are similar to their parents. I mean, my daughter was super, super shy. And my grandson Maverick seems to be developing into somebody that's just super. He loves people. He loves to talk to people. And now he's seeming to be loving the spotlight, which we'll see how this goes. So
I love that. I love that. It's part of it, though, right? It's a beautiful part of it.
it absolutely is. And every time when I'm helping families working late, working weekends, people ask me, why do you work so hard? It's because of my grandson, because of the legacy that I intend to leave for him and future generations. And Cassandra Terry always tells the story, but I'm so on board with this. I'm going to be the crotchety old lady photo that they have over the fireplace, 5, 6, 7, 9 generations from now. They're going to say, who is that lady? That was your great, 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 great grandmother. And this is why we have this wealth. So I love it. Well, thank you so much, Alan, for your time. I love this program. I love what you're doing. I love that you look holistically and proactively to do the right thing for the family so their dream doesn't become a nightmare when it comes to home ownership. So, how can people reach you? What's the best way for people to connect with you?
So my phone number is 408-887-5141. My email is arussell, so ARUSSELL at wintrustmortgage.com.
Wonderful. And
Those
I
are the
know
best
you're on,
ways.
I
And
know
I'm
you're
on
on
LinkedIn.
social media. Yeah.
Yeah, yeah. Can I tell one story before we roll?
Please do. Please
All
do.
right. I helped a gentleman named Dan a few years ago, and he told me at the sign off, I was attending it with him, his realtor, the escrow officer. We had a lot of people in the room. And he said, I don't know if you understand how important this day is for me. And I'm like, you're a homeowner. Woohoo. I'm a cheerleader, right? That's part of my job, I think.
Yeah.
And he goes, calm down. No, I want to tell you, I've traced my family back to just after the Civil War, and no one in my family has owned a home. So
Wow.
needless to say, within a couple minutes, really no dry eyes in the room, right? We're like, oh my God, thank you for letting me help, right? And that's the opportunity we get,
Wow.
whether it's that powerful and obvious or, my family growing up, we did not talk about finances. Finances was not part of it. And I've been able to help a family like that. That's just such a gift.
That is so huge.
No.
Because what I talk about is breaking those generational
Yep.
curses, right? I grew up in abstract poverty. My family we were on food stamps and welfare. My parents didn't work. And as a little girl, I'm telling you, I was 5 and 6 years old. I would see other neighborhoods where they had green grass and shiny cars. And I'd be asking my parents, why can't we live there? How come you're not working? I didn't understand this. So I get it. That's huge. It is huge. I mean, people might think it sounds a little, Pollyanna, but truly it's about breaking those curses for that mindset. And now what did he do? He's changed his last name forever.
Right.
And I believe that in every family, there is the one. Every family goes along status quo until the one shows up. And I know I'm the one in my family. I'm the one to break those generational curses and create generational wealth. And whenever I see my precious grandson, whenever I think of him, whenever I talk to him, I talked to him yesterday. I mean, that's what I'm visualizing. That's what I'm thinking about. That's my intention. And so, what you did for that family, you can't even quantify that.
No.
You cannot, there's no amount of money that they could give you to have that feeling. I know that. That's amazing. I love that you share that story.
Thank you. And thank you for having me on. And again, I do recommend people listen to the Money Minute because I've learned things listening to your calls.
Thank you so much. We love doing it. Well, that's it for this episode. It flies by every single time. Again, my name is Leah Garcia, financial strategist and insurance professional. Reach out to me, grab my free ebook. It's on my LinkedIn. You can grab that. And truly, it is a one-page financial plan where you could really take a temperature check of where you are and where those blind spots might be in your own finances. And with that being said, reach out to me. We will see you next week, where next week's episode is going to be really great. We're going to talk a lot about entrepreneurship and business ownership. So
fabulous.
We will see all of you at the top because we all know it's way too crowded at the bottom.
All right. Thank you, Leah.
Thank you.